With the cost of living crisis, people are looking at a number of ways to try and save themselves some money. In this video, we're going to look at one of the biggest possible savings that you may be able to make. Hi, I'm Erin. I'm one of the directors at Create Finance. Let's get into the video. So, have you built a number of debts up in the background and you're finding that you're using all of your spare money each month just to pay those debts? Do you own your own house? If the answer is yes, then I'm going to show you a way to potentially save yourself hundreds of pounds every single month. Debt consolidation can be a great way to save yourself money each month. So what is debt consolidation? Well, debt consolidation is where you may have a number of different types of unsecured credit in the background. That can range from loans, credit cards, catalogues, car finance. All of these agreements can cost you a considerable amount of money each month. So debt consolidation is where you bring all of those debts together into one loan. And what that also means, you've then just got one monthly payment. So if you've got equity in your house, you can use that equity to clear off part or all of those debts. When you're looking at debt consolidation mortgages, some lenders will even allow you to go up to 90% of your property value. So let's use an example. So if you've got a property which is valued at £100,000 and you've only got a £50,000 mortgage and you've got debt in the background, using that equity, you could potentially borrow a further £40,000 to take your new mortgage up to £90,000 and use the remaining equity within your property. And as mortgage rates are usually lower than unsecured borrowing, and you can spread it over a longer period, this is then where you can save yourself hundreds of pounds each month. Debt consolidation can also really help with budgeting. If you've got a number of payments that are going out throughout the month, it can become really difficult to manage. You may have a credit card bill that's due on the 1st. You may have a loan that's coming out on the 10th. You might have another credit card bill that you have to pay out on the 20th. And being able to manage that can become really tricky. When you consolidate that debt into one monthly payment, you then only have one payment per month. And that can really help in terms of budgeting. And also, if you've got adverse credit in the background, that doesn't mean that you can't consolidate your debt into your mortgage. There are some lenders out there that even if you've got adverse credit, that will allow you to consolidate debt onto your mortgage. Some lenders will even allow you to clear off your adverse credit into your mortgage. It may be that you've got a debt management plan in the background or an IVA. These are some of the types of adverse credit that you can put within your mortgage. So let's look at a client that we've helped recently with a debt consolidation mortgage. We had a client that approached us that had nearly £50,000 in borrowing, and that was split across loans and credit cards. Now, those loans and credit cards themselves were costing the client nearly £1,800 every month. They also had a mortgage with a balance of £180,000 on their mortgage, yet the property was valued at £350,000. So they had nearly £170,000 worth of equity within their home. So what we did is we looked at a debt consolidation mortgage and put that debt on top of their current mortgage balance. The clients were also looking to borrow extra monies for home improvements and actually wanted to borrow an extra £40,000 to cover that. And as there was enough equity within the home, that was something that was available to them. Now, the mortgage payment was costing them £1,100 previously. So with the mortgage and the debt, every month that client was paying £2,900 each month. The new mortgage payment reduced to £2,050, meaning that they were saving themselves £850 every single month. And don't forget, they also borrowed an extra £40,000 to fund some home improvements. That £850 per month worked out at over £10,000 every single year, which is a huge saving when it comes to the cost of living crisis. What that did for that family was completely change their lifestyle. And rather than just servicing the interest on the credit cards, they were now in a position where they could actually start to save some money and not use their credit cards anymore. Now, when it comes to consolidating debt onto your mortgage, it's really important to seek advice from a mortgage broker, especially a mortgage broker that's got a comprehensive range of lenders that they've got access to. And that's because different lenders have different criteria when it comes to debt consolidation mortgages. Some lenders don't allow it at all, whereas some lenders, as we mentioned earlier, will allow you to lend up to 90% of the property value. Some lenders may only allow you to lend up to 85% of the property value, and some lenders even lower than that. Some lenders will also have a maximum cap in terms of how much debt you can consolidate. And by reaching out to a mortgage broker that has a comprehensive range of lenders, they can make sure that they approach the right lender that fits your particular circumstances. When you consolidate debt into your mortgage, it's also really important that you close that debt down. So if you are paying off credit cards, make sure you pay them off and you close them down. And also make sure you clear your loans in full. If not, you could be in a worse position than when you started the debt consolidation mortgage. The other thing to consider when you're doing a debt consolidation mortgage is the overall interest. So your loans may only be over a 3 or 4 year term, and your mortgage term may be 20, 25 years, for example. So by adding that debt onto your mortgage and spreading it over a longer period may mean that you pay back more interest overall. And that's a really good reason to seek advice before you do debt consolidation. Before you consider a debt consolidation mortgage, it's also really important to look at your overall spending and make sure that you're not living beyond your means. What's the reason for that debt building up in the first place? Are your outgoings more than what's coming in? And if you're living beyond your means, then debt consolidation mortgages might not be the most appropriate thing for you. If you are experiencing financial difficulties, it's important that you seek some independent financial advice, and that may be through companies such as the Citizens Advice Bureau. So there you go. This is how debt consolidation can help you during the cost of living crisis. If you'd like to find out more information about bad credit mortgages, check out this video here.